Welcome back to Investing Talk Podcast. Today, we are wading into the pretty exciting world of quantum computing. Specifically, we're looking at a company that's just seen incredible movement, Rigetti Computing. And the big question, really, for anyone watching this space is this surge for real? Is now actually a good time to buy?
That's exactly the mission for today. And it's, a timely one. We're going to quickly synthesize what we can see from the materials, Rigetti's fundamentals, which are improving fast, their tech advantage, and of course, that wild stock chart. And just to be clear, we're sticking strictly to the analyst reports and the data provided.
Right, we've got Q2 numbers, balance sheet info, even a peek at insider buying. And hey, if you want us to look into a specific company next time, definitely leave a comment below. Let us know. But first, Rigetti, you just can't ignore the stock price movement. It's surged almost 5,500% since the start of 2025. 5,500%. I mean, that kind of number makes everyone stop and stare. Is this just getting started, or are we looking at, a peak?
Well, with a move like that, the first reaction is often bubble. It's just human nature. But we need to look past the headline number, look under the hood, and see if the business itself supports anything close to this valuation. Let's start with the fundamentals, the actual money.
Okay, let's unpack the engine room then. Rigetti's revenue is accelerating, yes, but let's be real about the scale here. For the first 6 months of 2025, they reported $4.7 million in revenue. Now, that is double the $2.1 million from the same time in 2024. So great growth rate, but the total number is still pretty small.
It is, Mel.
Yeah.
Absolutely. And that's the core tension, isn't it? Early stage potential versus current size.
Yeah.
However, the efficiency gain alongside that growth is what's really telling. Look at the gross margin. It improved to 62% for those 6 months. That's up quite a bit from 55% the year before.
62% margin. Okay, that's a significant jump. 7 points.
Exactly. And that demonstrates, as they get more contracts and figure out delivery, they're getting much better at managing their costs. That 62% isn't just growth. It suggests managed, efficient growth.
And management seems confident this will continue. They reaffirmed their full-year 2025 guidance, aiming for $9.6 million to $10.3 million in revenue. They're pointing specifically to their government and enterprise pipeline growing.
Yes, but for any investor betting on this kind of disruptive tech, the real peace of mind, or maybe just some peace of mind, has to come from the balance sheet. And this is where Rigetti looks exceptionally strong, actually. They've got a huge net cash position. Think about it, $46.2 million in cash and equivalents versus only $13.5 million in total liabilities.
Wow, okay, so they're basically swimming in cash relative to their debts. That's critical for a company burning cash on R&D. And that liquidity ratio you mentioned, it's huge, a current ratio of 5.2x.
It is. It's massive. $56.2 million in current assets against just $10.7 million in current liabilities.
Well, what does that practically mean for an investor?
It means they have a serious buffer. They can handle setbacks, technical hurdles, maybe even absorb a lost contract or two without hitting the panic button for more cash. It buys them runway for aggressive expansion and development. And importantly, they're showing discipline too. Their operating cash burn actually declined by 42% year over year. So they're growing the top line while improving leverage.
Okay, so the financials look surprisingly solid, lots of cash, improving efficiency. But in quantum computing, money isn't everything. It's about the tech lead, right? If they lose that edge, all the cash in the world won't matter.
Precisely. The technology is the competitive moat here, and Rigetti seems to be one of the few players in the commercial quantum space that's actually beyond just pure research. They have a hardware roadmap that's apparently scalable, plus an enterprise cloud platform. They're selling or trying to sell real machines.
And the key piece of that seems to be this proprietary processor, the Ankaa-3. The sources really highlight this one. It supposedly sets a new industry benchmark. Why is this chip so important?
Well, the crucial thing about Ankaa-3, based on the reports, is its improvement in error rates and computational capacity. If you're not, steeped in quantum mechanics, the big enemy is decoherence. Quantum states just fall apart incredibly easily. Errors are the absolute biggest hurdle. So any processor that makes a real dent in reducing errors and increasing capacity, like Ankaa-3 reportedly does, gets a huge advantage in making these things actually useful.
And that tech advantage seems to be translating into actual business. We're seeing repeat government contracts, DARPA, DoD, plus partnerships with national labs, even some Fortune 500s. These contracts, these partnerships, they feel like the real validation of their moat, don't they?
Absolutely. Because those aren't just simple sales. They involve deep technical work, building trust, That creates sticky relationships, real barriers to entry. A competitor can't just waltz in with a slightly lower price. They need demonstrably better tech that fits the existing setup.
You can't talk about quantum without mentioning the 800-pound gorillas in the room.
It's exactly the competitive threat. It's a classic David versus Goliath scenario, isn't it? You've got IBM, Google, giants with incredibly deep pockets.
Yeah.
Way deeper than Rigetti's. Now, Rigetti seems resilient right now. They're executing.
Yeah.
But that intense competition could absolutely lead to pricing pressure down the line, or it could force them into an R&D spending war they maybe can't sustain long term. That risk is always there.
Yeah, that tension, cutting-edge tech versus massive competitors is what makes this whole space so fascinating to watch. Okay, let's shift from the fundamentals and the tech to market sentiment. Because that 5,500% surge, wow, the technical indicators must be like completely off the charts.
They are pretty much textbook bullish, yes. The stock's been trading consistently above its 50-day moving average. That's around $22.50, and way above its 200-day, which is near $14.20. That kind of separation usually confirms strong, sustained, positive momentum. And there seems to be solid support, where buyers jump in holding between $29 and $32.
And it's not just the chart pattern. Analysts are overwhelmingly positive. The data shows 6 out of 7 analysts rate it a buy. But here's a detail I found interesting. The average price target jumped from $21 to $28 to $28.29 in just the last 3 months. They keep having to revise it upwards.
Right. The market keeps running ahead of their targets. And adding to that, you have insiders putting their own money in. SEC filings from September and October show clear net insider buying. Specifically, the CEO and some directors bought around 75,000 shares themselves on the open market at prices between $25 and $30.
That's always a powerful signal, isn't it? When the people who know the most are buying shares at these elevated levels. And it looks like big institutions are noticing too. ARK Invest, Vanguard, they've been adding to their positions.
Definitely bullish signals all around. However, we absolutely have to address the recent dip. The stock fell 23% in less than a month, just this October. Now, the sources suggest this wasn't about Rigetti's tech failing or anything company-specific. It seems tied more to the broader tech market sell-off, maybe some institutions trimming positions before earnings. But it's a sharp reminder for you, the investor, that even with strong fundamentals, this stock is volatile. It can swing hard with the market tides.
Exactly. And that volatility leads us right into thinking about the near future. What are the potential catalysts? What could kick off the next move, especially with Q4 just around the corner?
Well, the big one, the most immediate catalyst, is the Q3 2025 earnings release. That's set for November 11th. The market's going to be laser focused on 2 things there. First, updates on how the Onca3 commercialization is actually going. Are they signing deals? And second, proof that they're continuing to narrow those operating losses, showing the margin improvements are real and sustainable.
And beyond the earnings report itself, there's the contract pipeline. We're expecting potential announcements, right? News about landing some of those large government or Fortune 500 deals before the end of the year. Each one of those would be a significant validator.
Definitely. Each contract win reinforces the narrative. But then you have the more speculative, but potentially exclusive, drivers. The rumors. First, there's persistent chatter about a potential major partnership, maybe with one of the big hyperscale cloud providers. That would be huge validation.
A cloud giant partnership. Yeah, that would change the game. And the second big rumor, M&A. Talk of potential acquisition interest from larger U.S. or even European tech companies wanting to buy their way into quantum. If either of those rumors turns into reality, well, that 5,500% could look like just the beginning.
It could. But before we all get carried away planning our quantum retirement, let's bring it back to earth with the core risks again. They haven't gone away. First, commercialization risk. It's one thing to build impressive prototypes. It's another thing entirely to scale manufacturing and adoption smoothly. If that process hits snags or proves slower than hoped, profitability gets pushed further out.
Right. And the execution risk is still very real. They're betting big on continued R&D success and landing these major complex contracts. If Onca3 doesn't scale as planned, or if they lose a key government contract battle, the market reaction could be swift and brutal.
It absolutely could. That's just the nature of operating right at the bleeding edge. High risk, potentially high reward.
So synthesizing all this, looking at the strong financials, the tech leadership, the insider confidence, and these near-term catalysts, the overall picture painted by these sources feels overwhelmingly bullish. I'd rate it, based on this, a strong 9 out of 10.
I'd agree with that assessment. And it makes the stock interesting for different types of investors, potentially. It seems suitable for short-term trading, definitely, given those Q4 catalysts, the earnings, potential contract news, Anka 3 progress, lots of potential news flow. But it also looks compelling for long-term investment, assuming you have the risk tolerance, because of their genuine leadership position in quantum hardware and their proven operational improvements.
Which brings us to a final thought, something for you to really chew on as you consider Rigetti. Given their incredibly strong cash position, remember that 5.2x current ratio and all this persistent M&A speculation, how much of Rigetti's current massive valuation do you think is based on solid, predictable profits from existing contracts rolling in slowly? And how much of that, frankly astonishing 5,500% run-up is really just the market betting on either a takeover bid or perhaps an even bigger prize, a fundamental breakthrough in quantum error correction that changes everything?
The market's certainly pricing in more than just steady contract growth. It's betting on a quantum leap, fueled by a lot of cash.
A fascinating situation. We'll be back soon with another analysis. Thanks for tuning in to Investing Talk podcast.